We have been talking so far about the real estate strategies that you need to succeed. Now, there are a lot of folks that will say you should go find a distressed seller in a bad situation and help them out. Well, Greg and I agree on this point that taking advantage of somebody else's pain generally doesn't build the right kind of karma. And I agree. If you're going to buy property, do so. Hold yourself to a higher standard and go check out renterswarehouse.com. Check out the platform, check out the assets that are available there for sale, and then, of course, build wealth by making sure that you put the right type of management in place. We have a couple listener questions, Greg. Let's get to it. Question number one, how does the BRRRR, maybe they're 4R, so BRRRR strategy help you pull money out when you refinance?
Okay, so BRRRR is buy, renovate, rent out, refinance, and repeat, right? And so that's not my acronym there, but I've heard it before. It's real simple. If you manage to bust your butt and save enough money to buy a property with cash, okay, you have the ability to go in and make a really compelling offer to an owner who owns a property that it's in bad condition, where if you own a home that you've allowed to deteriorate, or you inherit a home that's been vacant for a while. There's a lot of examples of where the person who owns the house is not in a distressed situation. They just have a property that needs to have money put into it, because whenever they bring a realtor in and say, okay, what's my house worth? They say, oh, your house would be worth $200,000 if you fix the kitchen, update the bathrooms, and do a new roof. And they say, well, I'm not doing any of that, or I don't have the money to do any of that. Well, then you're going to sell it for a discount. But it isn't just the $200,000 value of the house minus the cost of the roof, minus the cost of the kitchen, and minus the cost of the bathroom. It's also minus a discount for doing the work. And so then you're buying a property at a price that is lower than market value, and you get some extra equity for the trouble and for the risk of doing the renovation. And that's completely cool, legit. You're not taking advantage of anybody. You're helping to buy a property that needs TLC and then putting that TLC in. If you do it efficiently, you can realize some wealth in that transaction. Then you rent it out. So now you've got a perfect condition house generating income, and then you can refinance. And so if that house, you bought it for, let's say, $150, you put $30,000 in, so you're in for $180, it's worth $200. So now you've got a $200,000 house where you manufactured $20,000 worth of equity in there for having done the renovation. Now you refinance. You go to the bank, you show them the lease, you show them the property, they do an appraisal, and you pull out $100,000 and you go do it again. That's the last R, the repeat. And you could basically take, I like the term velocity of money, is you take your money and you get it working for you in terms of creating value by buying a property that needs work. You then create equity in that process. Then you pull the money back out again. Now you've got a unit that you own. You haven't flipped it. That's the key. It's not BRRR sell, okay? It's BRR refinance and repeat. So you pull the money back out, all right, and then you put it into another property. And if you can take that same $200,000 that you had saved and roll it into the BRRRR strategy maybe 3 times, you wind up with 3 properties with tenants in place, paying the mortgages, and you've got the beginnings of a really fabulous portfolio.
I find it interesting. The last R definitely stands for repeat. It does not mean, hey, rest. It doesn't mean anything that has anything to do with shopping, right? Like, no, nothing like this. Don't go grab your favorite pair of loafers or sneakers or anything like that. Really invest back into yourself. Now, Greg, I know you have a very specific framework on how you pay down your properties. You like having debt on them, but you also think that an aggressive paydown strategy can benefit you depending on how you want to do it. Can you tell me a little bit about that strategy?
Yeah, I just take the profit and pay it down on the mortgage. So if I'm making a couple $100s a month in profit on a property, I'll send that couple $100s a month in to accelerate the mortgage down. All right, because my objective on this real estate is not for income now. I have a business and a job and an income generating part of my life, and the real estate isn't for that right now. The real estate, my portfolio really is all about legacy down the line, right? I want to have 50 houses paid off. I'm only about half the way there right now, but I want to have 50 houses paid off because I'm going to be giving them away. I mean, when my kids, when they get out of the house and graduate college, they might get don't tell them this, but they might get a house when they graduate college, because I'm going to have houses That to me is the ultimate currency. When they get married, their wedding gift is going to be a house. Now, I don't want to spoil them too much, but I also love the idea that my kids are going to be able to do whatever they want to do in terms of their profession. And if it turns out that my daughter wants to be a teacher, and teachers aren't exactly overpaid, she can be a teacher if that's what her passion is, but she's not going to have to worry about the finances. That happens to be one of those jobs. Law enforcement's another one, right? Jobs that are really important, can be really, really super fulfilling, but financially isn't really one of the ways. So you wind up sacrificing some of the finer things in life for that. And I want my kids to make decisions based upon what's going to make them happy. And so being able to have an extra $1,000 or $2,000 in income coming in, because I chuck them a couple of houses later on.
Yep.
And the way to have that be paid off, take a 30-year mortgage and then throw a couple of $100s on top of the pile every single month whenever the profits come in from the rent. And then you blink your eyes, and it's really true, man. You blink your eyes, a decade goes by. You blink your eyes, another decade goes by. Now you've got these houses, and the mortgage balances are down to almost nothing. It's a way to set up retirement where I just am not going to have to worry about anything, and if I do it right, they won't either.
I think that strategy is awesome. I'm going to be using the exact same strategy whenever my wife and I have some kids. And in your book, you wrote a book called Crash Boom. You say, have a kid, buy a condo, or buy a property. I think it's buy a condo, if I remember correctly. It was
have a kid, buy a condo, because it had a nice ring to it. Yeah, I wrote Crash Boom during the crash.
Yeah.
And so a lot of people look at the boom that happened afterwards, and they say, well, yeah, of course, the housing market's cyclical. That wasn't the way people felt back then. There were... If you look at the number of investment properties that were bought during the boom times of the mid-2000s, it was the highest investment activity ever while the market was accelerating up. Then the market crashed and investment transactions plummeted because people, no matter how much they want to believe that you want to be gutsy when the market is down, a lot of people lost faith. And they lost faith because they believed a lot of the hype in media about how the housing market was down for the count and it may never come back. That was totally wrong. I knew that the housing market would come back because I had the data to demonstrate it. And so I tried to put forth this idea of realistic optimism. It turned out to be the case. And all of the advice in the book was all about like a 25-year strategy. And so if you stop thinking about next year and start thinking about when you're 65, I promise you that the housing market's going to be doing well over that period of time. Because it's all tied to population growth. If population's growing, people want to live indoors. They tend to want to have houses when they have kids and dogs. And so there's always demand as long as the population keeps growing. So we can have recessions, we can have cycles, we can have wartime, peacetime, high rates, low rates. I don't care.
Yeah.
Doesn't matter. Over a 25-year period, the housing market is going to elevate. Demand for rentals is always going to be there. So if you buy good houses in good places, over time, you win.
I look at it just like this. Super simple. At the end of the day, guess who's still moving to the United States of America? Everybody.
Everybody can, yeah.
The opportunity is here. We have an environment that allows for businesses to flourish and for us to do very well financially, independently, if we so choose. And quite frankly, that's why you should be buying.